So how do you really get a handle on a country's role in the global economy? I mean, beyond all the headlines and the expert opinions. Well, today, we're going straight to the source. We're looking at the financial filings of global corporations. We're going to tell the story of China's economy by looking at what these companies are actually reporting on their own balance sheets. Let's follow the money.
And it all starts right here with just a single number, 60%. Now, what on earth could that possibly represent?
So that 60%, that's the share of sales that one company, an American industrial tech firm called Kennametal, makes outside of the United States. Right away, that tells you you're dealing with a truly global business. But, it also brings up a pretty big question. Where exactly in the world is all that business happening?
And to answer that, we're going to start by doing what any good analyst would do. We're going to follow the money, right there on the financial statements.
Okay, so these numbers from Kennametal's own report are, well, they're pretty revealing. After the US and Germany, look at that. China comes in as their third largest single market. We're talking nearly $190 million in sales in 2025. This isn't just some small side market for them. It's a core piece of their global revenue.
And when you visualize it like this, wow, it really illustrates the scale. You can see just how significant that Chinese market is, sitting right there behind Germany. So the big takeaway is that for a major U.S. industrial company, China is an absolutely top-tier customer.
But sales are only part of the story, right? To get a deeper picture, we need to look at something called long-lived assets. Now, it's actually a really simple concept. It's the physical stuff a company owns in a country. The factories, the equipment, all the property. It's their actual footprint on the ground.
So what do we see? Well, Kennametal has almost $74 million worth of these assets in China, and they are not alone. Check this out. Sandvik, a huge Swedish engineering group, reports over 6 billion Swedish kroner in their assets there. This tells you it isn't just about selling to China, this is about building in China. So, we've seen the investment, we know the money is there. But what exactly do these factories and all these assets actually produce? Let's move from the numbers to the nuts and bolts. Now, what's really interesting about this list is just how sophisticated this stuff is. We are not talking about simple assembly here. Kennametal's Chinese facilities are making some seriously high-tech industrial goods, metal cutting inserts, advanced metallurgical powders, even intermetallic composite ceramic powders. I mean, these are highly specialized, high-value products that are critical components for industries from aerospace to automotive. And this is what that looks like on the ground. On the left, you've got the entrance to a major facility, Jiangsu Tangong Technology, and on the right, a spool of high-grade wire inside one of their factories. This is the reality of modern manufacturing. It's large-scale, it's incredibly precise, and it is deeply woven into the global supply chain. Okay, so we've seen a Western company producing and selling in China. But what about a Chinese company? Who are their customers? Let's flip the whole perspective around. This is the sales breakdown for Tiangong International, a major Chinese company that makes tools and materials. Now look at this. Their biggest market is, no surprise, China at 46%. But the rest of the world makes up more than half their sales. Europe is a huge customer at 23%, and so is North America at 16%. And putting them side by side like this, well, it just makes the dynamic crystal clear. Both the US-based company and the China-based company have their home country as their #1 market, but both are deeply international. Kennametal's third biggest customer is China. Tiangong's third biggest is North America. It's a two-way street. It really is. Okay, so all of this global business doesn't just happen in a vacuum. Of course not. There's a whole framework of rules and standards and principles that govern how these companies have to operate.
Take Sandvik again, for example. In their annual report, they stated explicitly, their code of conduct is built on international principles, like the UN Global Compact, and that sets a kind of baseline for their behavior, no matter where in the world they're operating. Now, a huge part of this modern framework gets captured by just 3 letters, ESG. It stands for Environment, Social, and Governance. Really, it's just a way of measuring a company's performance beyond the financial numbers. Looking at its impact on the planet, its people, and its own internal accountability.
And don't think for a second this is just a Western concept. Here we see an award for a Jiangsu Province Green Factory, given to Tiangong Technology in December of 2024. This shows that sustainability and environmental performance are being recognized and promoted right inside China's domestic industrial sector too.
And we can't forget the S in ESG, the social part. It's so easy to get lost in these giant numbers, but these companies are run by people. Kennametal's filings actually show a specific performance award plan designed just for their China-based employees, and it's paid out in the local currency by the local subsidiary. This is how a big global strategy connects all the way down to local talent.
All right, for our final section, let's step completely inside a domestic Chinese company and see the story that they're telling about themselves in their own reports.
This timeline from Tiangong's 2025 report tells a really powerful story in just 4 bullet points. In February, they're recognized as a green factory. A month later, in March, they're expanding production of high-end titanium alloys. By May, they're listing on the Beijing Stock Exchange and signing deals for the aviation industry. It's a narrative of sustainability, advanced tech, and just constantly moving up the value chain.
And these 2 images, they just capture that journey perfectly. On the left, you have this incredible industrial achievement, workers celebrating the test of a brand new furnace. And on the right, the financial milestone, executives ringing the bell for their IPO on the stock exchange. It's a story about both making things and making markets. And this one company's story, it's not happening in a vacuum. It actually reflects a much broader trend. According to China's National Bureau of Statistics, the high-tech manufacturing sector grew by almost 10% in the first half of 2025 alone. So what we're seeing in Tiangong's report is like a microcosm of a larger national economic focus, a focus that drives global competition and innovation in the technologies of the future. So what do the balance sheets really show us? They paint a picture of deep, deep interconnection. Western firms are building in China, Chinese firms are selling to the West. It's this whole web of shared standards and shared markets. And it leaves us with a final thought. In this truly globalized economy, what happens in one boardroom or on one factory floor can ripple all the way across the world and land right at your doorstep. The real bottom line, it seems, isn't just on a balance sheet. It's in all of our lives.